Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
For anyone listening, this episode is visually intensive, so visit our YouTube channel, CoinCompass.com/YouTube to follow along. We use TradingView for all our charts, and you can sign up for a free account at CoinCompass.com/TradingView.
Hello, everyone. Welcome to another episode of the Bitcoin Basics podcast. Here with your host, Faris, flying solo today as we're doing a Bitcoin and markets episode. So if you are listening on our podcast, please head over to YouTube as this one is chart heavy. Essentially, we are just looking at Bitcoin today. So we're going to review the week that was, the week that ended Sunday, the 13th of June. And question that we are getting is Bitcoin still in a bull market? So what is the standard definition of a bull market? Well, one is where easier to identify what's a bear market, and a bear market is identified by an asset class that drops by 20% or more. So some people would look at Bitcoin. We're looking at that chart now. This is a weekly chart. And Bitcoin has had a 50% correction, where we went from just below $65,000 to $30,000 in the course of a couple of months. Now, having said that, the previous all-time high for Bitcoin before this latest bull run was $20,000. And it then corrected down to $3,000. So it stayed in there for quite some time. Now, if it's hard to call something a bear market when it is trading 50% or even now double than what it was at the previous all-time highs. So if you bought at 20,000 and you have doubled your money in the course of 2.5 years, you'd be doing all right. Not many assets, go 250%, 200% in 2 years. So fundamental basis, we are not in a bull market. What are some of the other definitions that we come across?
If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself.
The price is below the 200-day. That reached 250, but it should be 200-day moving average. So I've got some indicators lined up in here I'm going to use. All right, so the 200-day moving average for Bitcoin is this green one here. So as you can see, it says we are below the 200-day moving average. So, and we had, if this yellow one here, which is a 50-day moving average, crosses the green, many analysts would define that as a bear market. So that cross has not occurred. One issue that I take with this is that this green line here, this 200-day moving average, the reason they do 200 days is because that would be based on a traditional asset that would trade 5 days a week. So that would give you 40 weeks, take away holidays and stuff, and weekends. That's why they do that. But Bitcoin does not sleep. So if we were to change this from 200 to say 364, because Bitcoin does not sleep. Now, that moving average moves down to 29,000, which is a key line of support. So we're nowhere near. We are nowhere near that green line right now. So yeah, this is why I'm not too concerned about Bitcoin in a bear market at the moment. I think we have consolidated somewhat. My only concern that I have is we are potentially looking at a multiple head and shoulders scenario. So if we were to look at, if this were the head right here, up there, that's your head. And then we've got multiple shoulders. So shoulder one there. And a shoulder there. And there. So you could argue that here we would form the second series of shoulders there. So if this heads up and does not break above 60,000 and then all-time highs at 65,000, then yes, you could be a bit worried we're forming a multiple head and shoulders pattern. The pattern we're seeing now really isn't too much. We did have a triangle that was playing out here. That was this one here. It did morph though, meaning that it really did not. It actually broke. Here it was down forming here, so it actually broke below it. But yeah, this pattern here is one that you would most likely use at a high, not in the middle. So it's not a healthy middle pattern. That's one where you see where it's consolidating at all-time highs. So that would be a flag, a pennant up there. This is an upside down flag, upside down pennant, which is not very reliable. So the truth is we don't actually have a formation at the moment. We do have an indicator that's kicked in, but as far as a naked chart goes, we don't really have much of a formation to go off of right here. One thing that we did look at in our previous episode was the Bitcoin dominance. So this is how much money is going into Bitcoin versus the other altcoins. And we just saw it collapse from 75 down to 40. We identified 39 as a key level and then 35 based on just these swing lows. We bounced off 39. We haven't gotten near 35. So if this bounce keeps going on, we would expect the price of Bitcoin to keep going up. One that's actually looking weak is Ethereum. So Ethereum has had a lot of hype, and it's starting to look pretty weak against Bitcoin. Now, if we were to zoom out on a weekly chart, and this is where it's really interesting. So even though people were very bullish, Ethereum thing is going to $20,000. If you look at it versus the price of Bitcoin, you've had three significantly lower highs. Way up here, it got to 0.16 Bitcoin and 0.12, and now we're at 0.08. So it's still 50% below the all-time highs versus Bitcoin. And looks like if we break below 0.0633, I think we're heading to 0.055 relatively quickly. So Ethereum versus Bitcoin is not looking too healthy. So if Ethereum continues to break down, you look at Bitcoin continue to go up. Another one to consider is Bitcoin versus the US dollar. Now here what I've done is I've inverted the price of Bitcoin. So that's the yellow line. And you see as that yellow line goes down, that means the price of Bitcoin is going up. So 64,000 is way down here. That's this trough down here. The reason I've done that is because this pattern just follows the US dollar a lot more closely. Obviously, because Bitcoin, like oil and gold, is priced in dollars, there would be that inverse correlation. So a lot of proponents believe this is the end of the US dollar as the global reserve currency. And as we can see here, we may have a mini head and shoulders pattern playing out on the US dollar. That's this black line here. So if that continues to break down, you'd presume Bitcoin would follow, therefore Bitcoin going up in price. So I mentioned that as far as a naked pattern goes, we do not have one. So let's close all these distractions. We're going to go to a weekly chart. So one of the indicators that we do use here is the Tone Vague sequential indicator. So this is a proprietary one. And we have seen a 9 reversal here. So what this means is the selling has been exhausted and we are just looking at a reversal. Now, this could just be a temporary reversal, as in a dead cat bounce, and we go lower. Or we could start to go higher and see all-time highs again. I obviously would like it if we're the latter, we start to see all-time highs again. But this here candle I do really like. We've got this long wick and we closed right up near the high. From a trader's perspective, that is a really nice candle. Because you're basically saying there was a lot of buyers that came in at these lower levels and pushed the price up on a weekly chart. and we close near the high on the week. So going into this week, if we start seeing the price of Bitcoin go higher and close above $40,000, then yes, we are looking to revisit these all-time highs. We still have got a fair amount of choppiness to go through on the way there, so I don't think it's going to be clear sailing. Got a lot of people burnt around the $45,000 mark and $60,000. So I think it'll get pretty choppy, but hopefully we'll start to see things moving up in the price of Bitcoin. So that's it for this week's analysis on Bitcoin. I do believe we are still in a bull market. I am expecting this to be a good recovery, as in last week was the low at 30,000 that we will see for quite some time. That's what I'm hoping, but we will see what comes to pass. Thank you for tuning in, everyone, and I'm going to let Gordon sign us off.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.
Disclaimer. Any content provided by Coin Compass is for educational and informational purposes only and is not investment, legal, tax, or any other professional advice. A qualified professional should be consulted before making any financial decisions. Coin Compass will at times recommend certain products, services, and technologies, but these are opinions based upon our own or podcast guests' experience and not endorsements. We take no liability for out-of-date or inaccurate information, software bugs, manufacturing errors, technology misuse, or issues involving third parties. Visit coincompass.com for more information and please contact us.